Let me tell you something your school, your parents, and your government never wanted you to figure out. There is a machine, a literal money printing machine that has been running for over 100 years. The wealthy plug into it, the middle class ignores it, and the poor have never even heard of it. It's called the stock market. And in the next 7 minutes, I'm going to show you exactly how it works and why not, knowing this is costing you thousands of dollars every single year. Don't skip, don't scroll. This might be the most important 7 minutes of your financial life. Forget everything you think you know about stocks. The news makes it sound complicated. Brokers make it sound exclusive. It's neither. Here's the truth in one sentence. A stock is proof that you own a piece of a real business. That's it, full stop. When you buy one share of Nike, you don't just own a piece of paper. You own a tiny fraction of their factories, their patents, their brand, their profits. Every pair of Air Jordans sold, you get a cut. Think about that. You could be sitting in your bedroom in pajamas, and Nike's 40,000 employees are out there working, growing a business you partially own. That's not investing, that's owning. And there's a massive difference. Here's something that flips most people's thinking upside down. You think companies are doing you a favor by letting you invest? No. They need you. Building a business costs insane amounts of money. Tesla needed billions to build their gigafactories. Amazon needed billions to build their warehouses. They had two choices: borrow from banks and pay interest forever, or sell pieces of ownership to the public and keep the cash. They chose you, the public, the everyday investor. So when you buy stock in a company, you're not gambling. You're becoming a silent business partner in one of the most powerful companies on the planet. The question is, are you going to take that seat at the table or watch from the outside while others build wealth? Now, the part everyone actually cares about. How do you make money? River number one. Your stock goes up in value. You buy Apple at $50. Apple launches the iPhone 20. The world goes crazy. Now your stock is worth $200. You sell. You just made $150 per share for doing nothing but owning a piece of a great company. River number two. The company pays you just to exist. This is called a dividend. Certain companies, Coca-Cola, Johnson & Johnson, McDonald's, literally deposit cash into your account every single quarter. Not because you did anything, because you're an owner. Coca-Cola has paid dividends for over 60 years without missing a single payment. Wars, recessions, pandemics. Didn't matter, the checks kept coming. Now here's where it gets dangerous in the best possible way. When you reinvest those dividends, use them to buy more stock. Something called compounding kicks in. Your money makes money. That money makes more money. Einstein called compound interest the eighth wonder of the world. He wasn't joking. Here's where most people destroy their own wealth. They see stock prices moving every second and think, this is chaos. This is gambling. I could lose everything. So let me explain what's actually happening. Stock prices move because of human emotion, fear, and greed. Every second of every trading day, millions of people are making emotional decisions. Buying because they're excited, selling because they're scared. When bad news hits, prices crash. When good news hits, prices explode. But zoom out. Look at any 20-year chart of the S&P 500, the index of America's top 500 companies. It's gone up every single time, through every war, every recession, every pandemic, always higher. The people who lost money in the stock market are almost always the ones who panicked during the dip and sold. The people who got rich, they bought more during the crash. Volatility isn't the risk. Panic is the risk. You don't need to be rich to start. You need to start to get rich. Big difference. Step 1. Open a brokerage account today. Fidelity, Schwab, eToro. Free to open, free to use. Takes 10 minutes. Step 2. Don't pick individual stocks yet. I know, I know. You want to find the next Tesla. But 90% of people who try to beat the market lose. Instead, buy an index fund, specifically something tracking the S&P 500. You instantly own a piece of 500 companies. Amazon, Google, Microsoft, all of them. Step 3. Invest the same amount every month, automatically. $50, $100, whatever you can. Every single month, regardless of what the market is doing. This is called dollar cost averaging, and it removes emotion entirely from the equation. Here's what that looks like in real money. $150 a month. 10% average annual return. 35 years, you'd have over $600,000 from $150 a month. That's not financial advice, that's mathematics. Here's the brutal reality. Every month you wait to invest as a month of compounding, you'll never get back. Time is the one thing money cannot buy back. The wealthy figured this out early. That's why they stay wealthy. It's not luck. It's not connections. It's a machine they plugged into decades ago and kept running. That machine is now available to you. On your phone. Today. The only question is, are you going to use it? If this video changed the way you think about money, share it with one person who needs to hear it. And subscribe, because next video we're breaking down exactly how to analyze a stock before you buy it. You don't want to miss that one.